So you just got a roof inspection and they gave you some news you might not have been ready to hear. And if you're like most homeowners, that's not just sitting in your savings account. So what do you do? Well, let's find out. Hey there, I'm Kevin with Equity Roofing, and we've helped hundreds of families across central Pennsylvania and the Michiana regions finance new roofs when they weren't ready for it. Here's what we've learned. Most people are surprised by how accessible roof financing really is. We've broken it down into 5 options, and that is financing through your roofing company. An example that we use is GoodLeap, home equity loans, personal loans, credit cards, and government and state programs. So option 1, let's start with financing through your roofing company. This is what we offer through a partner called GoodLeap Financial. Think of it like this. It's an unsecured loan, which is just a fancy way of saying you're not putting your house at risk. If your credit score is around 650 or better, this is probably going to be your easiest option. Now, what I like about it is you get approved fast, and you don't have to make your first payment until 60 days after your new roof is finished. That gives you some breathing room, especially when you weren't expecting it. You've got 2 choices. There's a 0% interest option, but that's only good for the first 12 months. After that, it will convert into a full loan and at a higher interest rate. So this one's perfect if you know money is coming, maybe you're selling a property, maybe you're getting an inheritance. Whatever it is, pay it off in that first year, and you don't have to pay a dime of interest. The other choice is our standard fixed rate loan at a 10.99% interest rate, and that's good for up to 15 years. Your monthly payment on a $20,000 roof would be somewhere between $200 and $300. Not the cheapest option, but it's predictable and you know exactly what you're paying every month. Next up is option 2, and that is a home equity, or commonly referred to as a HELOC loan. Now this is where you borrow against the value that you've built up in your home over the years. A HELOC works kind of like a credit card. You can pull money out as needed, and this becomes a great option if you've got substantial equity in your home and you're not really in panic mode about getting your roof done tomorrow. The approval process does take some time, potentially a month or more. You'll need a credit score of 620, and you need to have built up 15 to 20% equity in your home. So if you just bought your home last year, this probably isn't going to work for you yet. But the big advantage is lower interest rates. You can borrow more money than with other options, and here's a bonus, the interest rate you pay is often tax deductible, which can save you money come tax season. Now the downside is your home becomes the collateral. If something goes wrong and you can't make the payments, that does put your house at risk. And like I mentioned, if your roof is leaking right now and you need help fast, waiting a month or more for approval might not work. Option 3 is personal loans. Now personal loans are pretty straightforward. You go to a bank or a credit union, they look at your credit score and your income, and they decide whether to lend you money. It's as simple as that. This is a good fit if you need money quickly and don't want to use your home as collateral. Most places want to see a credit score somewhere between 580 and 650, but some may want higher. Now here's the good part. It's fast and there is no collateral, so you're not risking your house. Here's the not so good part. The interest rates can be all over the place. We're talking anywhere from 7% to 36%, depending on your credit. And if you're on the higher end, your loan gets really expensive really fast. Just something to be aware of. Option 4 is credit cards. And let's be honest, when you talk about credit cards, I only recommend this if you're dealing with small repairs or something under $5,000. Right now, the average credit card interest rate is well over 25%, and that's pretty rough. The only time this makes sense for a bigger job is if you have excellent credit and you can get one of those promotional 0% interest rates. For a full roof replacement, skip the credit card. It's just going to cost you way more in the long run. Now, option 5 is government and state programs. Here's something a lot of people don't know about. If your credit isn't great or money is really tight right now, there are actually government programs designed specifically to help you. These programs are aimed at folks with limited income, seniors 62 and older, or anyone who's having trouble qualifying for traditional financing. And I want you to hear this. You're not out of options just because your credit score isn't perfect. Let me give you some real examples. There's something called HUD Title I loan, and it's made for people who have bad credit or haven't built up equity yet. Perfect if you're in that situation. There's the 203K mortgage that actually rolls your home purchase and your repairs into one single loan, which is really helpful for new home buyers. For seniors, there are home equity conversion mortgages where you don't have to make monthly payments at all. The loan just gets paid back when you eventually sell your home or pass away. And the USDA has a program called Section 504 that helps low-income homeowners with loans or even grants. Then you've got programs right here in your local areas. Pennsylvania has what's called the PHFA loans, specifically for home improvements. And if you're over in Goshen, Indiana, there's an amazing program called Help a House. It's 0% interest, 0 monthly payments. You only pay it back when you sell your house or move out. Look, the point I'm trying to make is this: don't count yourself out. If money is tight or your credit has seen better days, these programs exist to help people exactly like you get the roof you need. Now here's a money-saving tip. Pay in cash, even partial, and you'll get a 2 to 3% discount. Cash means an ACH transfer, a check, or paying in actual cash. You can use a home equity loan for partial payment and still get the discount, as long as it's not the company's in-house financing. Now, there are some red flags to avoid. Watch out closely for prepayment penalties, variable interest rates that will increase, and poor customer service. The ideal company tracks your application, troubleshoots with you, and answers questions quickly. Look, needing a new roof when you're not financially ready is very stressful. And we get it. We've been there with hundreds of families. But here's the truth. Roof financing isn't just possible, it's accessible, flexible, and designed to help you through exactly this situation. At Equity Roofing, we guide homeowners through every step, from financing to final inspection. If you found this helpful, check out our video answering the most common questions roofers hear. Next stop, a better roof.